Yo, what's up, guys? It's your boy Ibrahim Forrest, and over here today, I'm going to be teaching you guys, and I'm going to be showing you guys my setup on what the market is going to do as soon as the market opens on Monday. And this trade will definitely be trading on the London session because it is the Euro USD, which means the Euro versus the United States dollar. So let's quickly jump into the chart. So guys, as you can see, the first thing that we are going to be doing, and the first thing that we are going to be looking for is a break of structure. So how are we going to be looking for a break of structure, and how are we going to see that break of structure in this particular pair? Is that we are going to be drawing out our trend line, and through our trend line we are going to find out our break of structure. Yo, what's up, guys? Back to the chart. So you can see here how we are definitely identifying the trend of the market. You can see here the market was moving from here upward, move down, move upward, move down, move upward, move down, move upward. But when it gets to this zone, it refuses to make an higher high. Instead, it breaks downward, starting forming a change of character down to the downside. And you can also see how the market has been forming and how the market has been going to the upside of the chart. So here you can see that is a resistance level actually moved downward, make an impulse to the upside, a correction to retest this level. As you can see here, retesting this level, and after retesting this level, it started also moving to the upside, make a huge impulse move to the upside, retest back this level, this resistance level, and make a huge impulse to the upside, retest this resistance level, and make a huge impulse move to the upside, just like that. And after that, you can all see that the market actually stopped moving to the upside, and what it eventually does was that it started creating this chart pattern. For those that have been trading for a while now, we all know what is a chart pattern. Yeah, a chart pattern is a concept that moves and shows the direction of a new trend in the market. Yeah. So as you all can see here, after creating this chart pattern, which is known as the head and shoulder, this is the left head, the left shoulder, the head, and the right shoulder. You could see that the market actually broke out from this zone. You can see after breaking out, then this resistance, this support zone, this little support zone actually act as a resistance here, which is showing you that the market is moving to the downside. So you can also see how the market actually broke out from this zone, then this little support zone to the upside, break down, making an impulse to the downside, a correction which actually came to this zone to make a retest to find its balance of making an impulse to the downside. Then after that, it came back to this level to make a retest to the downside. So as a trader, what I'm going to be looking for now is my entry. How am I going to be looking for my entry? I'm definitely going to show you here, so that as soon as the market open on Monday with the London session, we are supposed to be jumping into the EU, which is known as uh, the Euro USD, yeah, which is known as the Euro USD. In case for those that will be asking what time frame are we using to analyze this chart, we are definitely using the 4-hour time frame, and now we will jump it down uh, to the daily time frame for more conferences to get our confirmation. Where we jump it down jumping up to the daily time frame is because we are looking for our entry. And how are we going to be looking for our entry? Is by drawing our Fibonacci from a swing high to a swing low. It's not that we cannot use our 4-hour time frame to draw our Fibonacci, but it's definitely that the the daily time frame is going to give us a clear view, and is going to give us what we are looking for in the market without getting any interruption in the market. That's why we are using our daily time frame. And the daily time frame, here's our swing high, here's our swing high, and over here is our swing low. And you can see that as soon as the market got to this zone, it went up back to tap into the 0.618, which is known as our golden zone, making this a engulfing candle to the downside before breaking this low. So as the market has broken this low now, it chooses to go up once again. So what are we going to be doing? We are going to adjust our fib retracement to see where the market is going to. So as soon as we get our Fibonacci retracement, as soon as we adjust it to the new higher high and the new to the new swing high to the new swing low, we can see that the market is already tapping into the 0.618 again, which is known as the golden zone. So now we'll be jumping back to the 4-hour time frame to show you more conferences that this market have more potentials of going down in the next trading week, and we are going to be making a good profit out of this trade. Yeah, we are back to the 4-hour time frame. I know so many people will be asking, how do we know that this market is going downward? That's for the new, like the beginner traders. So I'm going to be showing you here. Like for me, I use more conferences. After using my fib retracement, my breakout, looking for my retest, I still want to look for my fair value gap, which is known as the FVG. How I look for my fair value gap is I actually look for a 3 consequent candle, as you can see here. 3 consequent candle. You can see this 3 bullish candle that is over here before the market actually make this bearish move to the downside, breaking this support zone. You can see that the market actually use one candle to break 3 major candle, which is telling you that the bears are fully into the market more than the bulls. You can see the market make, after this breakout over here from this point, this right shoulder, you can see that after this breakout, which the market actually used to break out from the trend, then the market make this 3 bullish candle, which you can see here, 1, 2, 3. Then after that bullish candle, the market actually used just 1 bearish candle to defeat this 3 bullish candle and break out and break this support zone once again, which is telling you that the market is definitely on a sell. And how am I going to be knowing more? And how am I going to find out my FVG, which is not at the fair value gap, is definitely for me to place out. I will be marking out from the three consequent candle, from this eye, from the first candle's eye to the last candle low, to see if it's going to give me an exact thing, and if it's going to be aligning to this next resistance zone. I'm having a little bit of internet connection issue, so sorry about that. That is how it always is here in Nigeria. That is one of the problems we are facing here in Nigeria as a forex trader. We always have an internet connection issue. So I'm waiting for the internet to come back so I can show you more. So how are we going to mark this out? We are going to bring in our horizontal ring. Bringing out our horizontal ring, dropping it at this position, which is the top of the uh, uh, lowest candle, the lowest consequent candle. And I will also be bringing out our horizontal ring again to place it at the bottom of the highest consequent candle. And if I'm going to be removing the Fibonacci for you to be seeing it clearly. If you can look deep, you will see that this zone was actually aligning with this zone. And I'm going to also remove this one, so that you will know that even without the Fibonacci, we can still cash this move, that the market is actually going to the downside. And for this one, you can see that we couldn't cash it with a FVG, fair value gap. So what are we going to be doing? Because we are not seeing any three consequent candle that is aligning together over here. So what are we going to do now? We are going to go back to the daily time frame. We are going back to the daily time frame to see if we can see a three consequent candle. Yeah, if we can see a three consequent candle that is going to be aligning with this zone of the market going down. So if you actually look deeper, you will see that there is a three consequent candle, and we are going to drop one at the below of the highest candle and drop the other one at the height of the lowest candle. Then we are going to be jumping back to the 4-hour time frame. Sorry so much for my English. I'm not too good at English, and also I'm very sorry for the internet connection. Please stay with me, subscribe, like, share for more content, and I believe as time goes on, I'm going to be giving you a beautiful content. Please support, because now I don't have a good camera and I don't have a good working space. But I believe as time goes on, things are definitely going to get better. So here is it. You can see that the market is actually tapping into this support zone. So the market will literally start moving from here, from this zone. So as soon as the market opens on Monday, we are going to be jumping into this trade. So let's go back to the 1 hour time frame to see if we are going to have more confluences of going into this trade. Here's the 1 hour time frame. You can clearly see that in the 1 hour time frame, the market is actually giving something like a double top. So let's go to the 30 minutes time frame for more confluences, for a stronger confirmation if this market has actually gotten to the point of it going downward. The internet is very slow. Please be patient with me. I have something to show you. This is the 30 minutes time frame. You can also see that the market is also giving us a confirmation that it's time for it to be going down, which is known as the confirmation here is that it's showing us a double top, that it's time for it to go down. Let's go more deeper. Let's go to the 15 minutes time frame and see. And here is it. My analysis is pretty sure, and our strategy is pretty sure that the market is going down, because this is a clear double top that the market is already coming down. And over here in the 15 minutes, you can see that the market has already broken out this level. So we are going back to the 4 hours time frame to place in our order. As you can see, the actual point we are targeting in this market is this support zone, which the market actually used to start moving to the upside. So this is the zone we are going to be targeting. But at first, if you are a type of trader that loves taking like some small pips out of the market, let me show you. This is where we are going to be targeting at first. From this, for up here, we are going to be targeting down to this side. And as soon as we get to this side, we are going to be looking for a re-entry to the downside. So how are we going to, why am I saying we should target here first? Because you can definitely see that the level that the market is over here. This level that the market is over here is a very strong zone whereby the market has tested previous times. So if the market could break through here, it will definitely make a retest at this point, as you can see here, and there we'll be looking for a re-entry down to the downside of the market. This is what I'm definitely going to be expecting from the market: an impulse to the downside, a retracement to the upside, and another impulse to the downside. Let me see your comment section. Let me see you in the comment section. What do you think about this trade? Isn't this a nice trade to look at for, and a nice setup? Isn't this mind-blowing? I believe this market is going to take us to our next level. Thanks very much. Peace. See you in the next video.